So more profit pilot. When I have conversations with people, I engage in the conversation. I start with the tool we just looked at, the more profit genie. I just start playing with some numbers with them. I tell them, hey, let's throw some numbers in here. It could be your actual numbers, but you can just make some stuff up. I just want to show you how this works.
I was going to say, I can almost guarantee you, I suspect that when you do that, that is more thought than most people have given what you're asking them about than they have up until that point.
Yes,
Because
exactly.
that is
Yes,
fundamentally part of the issue, right? Is that not realizing these are all components of what they're trying to do,
yes,
and how they are all interrelated.
exactly, exactly. And once they see this and they go, oh, okay, I need to be thinking about these things. Then I go, okay, well, there's a different approach I'd like to introduce to you. Okay. And then I go to the more profit pilot and I go, okay, so let's enter baseline numbers. Okay, let me clear the numbers again from this tool. All right. So let's enter some baseline numbers and I'm going to show you, we're going to take a profit first approach. Okay. So let's first enter some baseline numbers. What's the baseline annual revenue for this company, this fictitious company?
$1 million.
1 mil. Oh yeah, the golden $1 million.
See what I did
Okay.
there?
Yeah, I see that. All right. So then what is their gross profit margin?
Let's say 30%.
30%. Okay.
Excuse me, gross profit margin.
Gross.
Say 50%.
Okay. That's what I first
Yeah,
had in my mind until you said 30. I'm glad you changed it to 50. See the mind meld.
yeah.
Okay. Net profit margin.
Let's say 30%.
Okay. Oh, see, I was going to say 20, but you've
We
said
can go with
30.
20.
No, no, we got it. We got it fixed. Okay. Baseline conversion rate. What did we have in that other scenario? Did we say it was
I think it was
20%?
20%.
Right. Okay, let's put 20. Our transaction size was 1,000, right?
Yep. Yep.
And then the percent of repeat buyers was 10.
Yep.
And then the number of repeat buyers buying, oh, it's two, right?
Yeah.
Number of repeat purchases.
Yep.
Okay, cool. All right, now in this tool, we're taking a profit first approach. Okay. But first, we've calculated the baseline net profit, which is 300,000 for the year. Now, to set our new profit goal, we're going to say, okay, by what percentage do we plan to increase our net profit? Nolan, what number do you want to put? What percent do you want to put in here?
The percentage increase, let's
Yeah,
do 20%.
20%. Okay, so our new net profit goal is 360,000. Right. So now we've established the profit goal first, right? Now, what else needs to happen on the financial side that's going to support the company to spin off this level of profit? So what we're really talking about on the financial side is what are the other costs and expenses that are going to go out the door, the fixed costs and expenses? What's going to change with the overhead to grow this company? By
Uh,
what percentage do you think this is going to
Say, let's 15%.
15? Okay. So these are the new cash going out or financial goals for this company. All right. Now we need to look at, so now we've set the goals, the financial goals. That's the cash that's going to go out, including the profit, right? So now what is the sales level that's required in order to fulfill on these financial goals? That's what we're going to calculate now. So is there going to be any change in the variable costs and expenses? And in the previous scenario, we said yes, right?
Yep.
I think we did say yes.
Yeah, we did.
Okay. By what percent do we say it goes up? Did we say 10?
I think it was 10.
Okay, let's go 10.
That's what I was
And
going
then
to say.
for the transaction size, what do we want to increase it to? Do we increase it?
I think we
We went
said,
to 1250.
yep. Yep.
Okay. And we said increase in repeat buyers
So, but
10%.
that, just to confirm, is it 1250? Is that the new size, or you want to put the change, right? So wouldn't it be 250?
Oh, sorry, you are right. See, that's a good thing I have a accountant helping out here. I was just testing, Nolan, to make sure you're paying attention. You did.
I'm not asleep at the wheel. I'm doing okay
Okay.
here.
In this case, it's not asleep at the spaceship controls. Okay, change in repeat buyers. Can we say 10% here?
Yep.
And then change in frequency
It was 2 point.
25%?
Yep.
Okay. So these are the new sales goals. These are the sales goals that if this company reaches these sales goals, they'll be able to fulfill their financial goals, including that profit goal. Right? So now the company now needs to be a $1.3 million revenue company. All
Which,
right,
just for
now,
comparative purposes, right? What did we say we thought revenue needed to be? It was 1 million,
yeah,
right? And so here we go. If you had targeted 1 million, you would not have gotten to where you wanted to be, right?
yeah, exactly. You would potentially had a cash flow crisis,
Yeah.
right? Okay,
And
now, oh,
sorry,
go ahead, go ahead,
can I make one
go ahead,
more
Nolan.
connection here? Because I think this is important to understand to
Yeah.
what you just said. So what often happens for businesses is they won't do what George just did, and they will go, I need $1 million in revenue. But they will get the staffing spend correct.
Ooh.
So they will buy all the people for a $1 million business, but they really needed $1.3 million for the people they bought. And now they're
Mm.
$300 short. And that's where they get themselves in trouble.
I mean, now they're $300,000 short.
Right. That's
Yeah,
what I said.
yeah,
Or meant to say if I didn't.
yeah,
Yes. Is that in ultimate, you spent the money probably more accurately than you projected you needed to make. And that's where people get that crunch, right? Is that
right,
they may hit that marketing goal, but where the actual shortfall occurs is that it wasn't actually enough to justify the underlying expenses that they
right.
had built up to do the work and in the increase in that revenue.
Yeah.
Sorry, I just wanted to make sure. I want to more explicitly connect those dots for people if that was.
Oh, I think that's a really important point that you just shared. Most if it, unless you see the numbers on screen, it's hard to visualize that. Okay, now the next thing we need to do. So what we've done, we've connected. We've set our profit goal first. Now, then we've set the financial goals, and we've connected our financial goals to our sales goals. Now the next thing we need to do is now connect our marketing goals. What is the marketing we need to do to achieve our sales goals? So we're going to grow the business, Nolan. By what percent we what can we increase the sales conversion rate by?
We'll go with 20% again. I think that's what we said
Let's
last
do
time.
20. I think you did. Yeah. Okay. So we increased the sales conversion rate, not to 20%, but 20% above the baseline. All
Yep.
right. So now these are the marketing goals. These are marketing qualified leads. All right. So here's a summary of the overall goals. If you look at the bottom, that's the new net profit goal, 360,000. And now we have interconnected financial, sales, and marketing goals that if these goals are met, this company will be able to spin off the 360,000 in net profit. This is what I meant by setting your profit goal first and then set interconnected financial, sales, and marketing goals in that order.
Yeah. There's a lot of numbers that get produced from this analysis that I think would shock most people when they started, right? That to get the results that you're showing there, right? That they would need 4,082 leads,
Yes,
right? And that I think is probably more than most people would have thought they would have needed based upon the overarching like revenue numbers and such that we talked about.
that's correct.
And
That's
that's a
correct.
problem that people run into when you start doing like millionaire math, is that it's very easy to go like, oh, it's $1 million. Oh, it's like I've spent 300,000. You're like, oh, it's not that much to get to this target until you go, oh, I need 4,000 leads. That's that's a lot more leads than I realized.
Yeah, exactly. I like that term, millionaire math. That's like mental bookkeeping too.
Yeah.
All right. So now this is a very simplified tool, the More Profit Pilot. I use this when I'm having conversations with potential clients or with existing clients where we want to just quickly model an idea or model a new product or service line. We'll use this tool because but it's very simplified. It doesn't take into account recurring revenue. It doesn't go into all the detail that we potentially could go into, which we'll go into a more detailed tool a little bit later, but I just wanted to illustrate this point of the principle we really embody here is profit first and then financial, sales, and marketing goals set in that order.